Good evening. Welcome to the Loan Officer Training Series with the Mortgage Calculator. Tonight, we're going to be talking about how to calculate W-2 wages. So yesterday, the past few days, we've been talking about calculating different types of income. So we'll do kind of the basics here for W-2 income. Give us just a moment here to go live on all the different platforms. We put the chat up on the screen. Go ahead and drop a comment there in the chat as you tune in. We appreciate it. And we'll get started here in just a moment. You can feel free to drop any questions you have in the chat as we go through here. We'll be happy to answer any questions you have on the topic as we go through the training here today. Appreciate those tuning in nice and early. Go ahead and drop a comment, hit that like button, and we'll get started here in a moment. All right, it looks like we're live on all the different platforms, so we will go ahead and get it started. We're going to take the chat off the screen for now. We'll go ahead and keep dropping comments there in the chat and drop any questions you have as well. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, and I am here with our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every Tuesday and Wednesday evening at 7 p.m. Eastern time on this show is go through a different loan officer training topic. This week, we've been doing calculations of different types of income. So we will today be talking about how to calculate W-2 wage income. So our sales manager, Jose, with 28 years of experience, will take us through those basic W-2 income calculations. So go ahead, Jose. Well, they are not always basic, I guess I should say, but definitely a standard.
Yes, definitely. Definitely not always basic. The whole purpose of it here, obviously, is for us to reinforce everything that you need so that your file is off on the correct trajectory from the beginning, because these contracts are really tight. A lot of competition for all of these deals, and they're putting really tight closing dates on these contracts. You're getting a lot of times you're going to get a contract, and by the time you get it, there may only be 15, 18, 20 days left. They want you to have for the closing. Mind you, you're not even taking into consideration the very important financing contingency period or loan approval period, whatever you want to call it, the date during which time you can still the customer can provide a denial letter and get returned their deposit. So those are all very important considerations here. We're talking about properly calculating the income on a purchase, right? Or if you mess up and you got to do a do-over and send it somewhere else on the right path, now all of a sudden you could be delayed, or maybe get some additional documentation that you need, additional verifications of employment from prior employers that you may need now to confirm your overtime income or your bonus income, right? If you notice on the variable rate, variable income class that we just had. So let me share my screen with you here, and we can start breaking it down. We are going to talk on how to calculate W-2 income. However, as we were just going over, we know it is not as simple as it seems, because again, we're talking about all of the considerations and all the repercussions if it's not properly done. We're talking about purchase loans, right? And tight closing guidelines. Closing time frames, excuse me. I got guidelines in the brain. Tight closing time frames, and how you want to make sure that you calculate everything properly, not just for a submission, but let's talk about building credibility throughout the loan process. If you incorrectly calculate the income and now there's it's being held back, or you incorrectly calculated it when you did the pre-approval and now you're in the deal, they're in escrow, they already put down the deposit on the contract, and all of a sudden the deal may fall through because of the incorrect income calculation that you had plenty of time to do when you did the pre-approval. So let's take it back to the genesis of the deal, right? So, with that being said, what are we talking about here when we're talking about W 2 wage income? Well, very basic. W 2 wage income is income where the employer, and that's the key consideration here, you are an employee, they are the employer. The employer reports their earnings to the employee via Form W 2 and withholds the payroll taxes for that individuals, right? So that's your standard employer employee relationship. It occurs with a Form W 2. Remember earlier, training recently, we were talking about self employed borrowers, 1099 loans, and how a 1099 borrower is an independent contractor. They may be contracted by somebody who they may think is their employer, but that's really the person that's contracting them to do the work and is paying them as an independent contractor with a 1099. In this case, you're paid as an employee, as a W 2 wage earner with a Form W 2. Now, that W 2 wage earner could be salaried, right? They're on a set annual salary. However, even when you're on a salary, you have to consider things like bonuses. You could have performance bonus for a bunch of you could have different bonus categories for different objectives, each adding up to your whatever bonus in total you get. But you could have more than one bonus, and they could or could not be paid every year, right? Things for you to consider because as you're going to see, the challenges when you're looking at a variable component of the income. So even a salaried W 2 wage earner can have variable income. And remember, we just had the variable income class. So, and bonus is one of those variable income categories. So you all know how to deal with that. Our W 2 wage earner could be hourly, could be, 40 bi-weekly, monthly, however they're paid, but they're paid hourly. Now, on our hourly people, we still have variable income to consider, right? Overtime. Overtime is a variable income consideration. Now, our hourly person could also get bonus. I didn't put bonus in there under the hourly worker category, but bonus also is applicable to your hourly workers, as is overtime. Overtime, unfortunately, is not applicable to our salaried workers. At least it's typically not, unless they have some different category for them and they have it on a pay stub and they can document it for 2 years, because that would be a weird one to have a salaried worker getting overtime, but our hourly worker can get overtime and can get bonuses as well. Our W 2 wage earner can also be paid by production, right? Per like piece per unit of production. So that's like a commission type arrangement, but you're paid on production, but you're still W 2 because you could still be an employee, a W 2 employee, get paid like that based on production. That's almost like sales, right? Um, but still be W 2 because they're going to be deducting your taxes, your payroll taxes. That's the key. You get paid on a W 2 and not on a 1099. You're not an independent contractor, you're still an employee. The W 2 wage earner could also be paid per job. So you could have a construction worker type individual who has all of their maybe they have their own tools, maybe it's company provided tools, maybe that's a business expense write off, right? Unreimbursed business expense. But now I'm going off on a tangent there. That would be for another lesson for W 2. That's taking the W 2 wage earner deep when you have tax returns involved. But in this case here, you could have that person that does a job, like let's say does a marketing project or a construction project or some type of project. And once that job is finished, they still may get paid as a W-2 employee. They just have continual, they're just paid like based on their performance, I guess you want to say, per job. That's how they break it down. Maybe it's easier in some scenarios. It's sort of like a hybrid of a being a freelancer, but you're not because you have your employer that pays you as a W-2 and they just have you do projects. Depends on how you want to break down your payroll and your human resources on how you pay your individuals, whether it's salary, hourly, per job, or based on production. All are W two as long as they are an actual employer. The employer withholds payroll taxes and uh, uh, discloses their earnings via Form W two. So, what are some of the challenges faced to verify W two income? Well, again, so you see some similarities here from the prior lessons. The income is trending downwards. If they just got the new job and the income is trending downwards, well, maybe that's a different story. But if they are in the same job and the income is trending downwards, then like what's going on? What's the explanation? Is it a reduction of hours, reduction of hourly pay, reduction of duties? I mean, what's going on? A company going out of business with running out of money, so they're cutting everybody's hours in half. I mean, what's the situation? Because obviously we got to go with the most current depiction of the borrower's income. But if it's going downward, is it going to continue going downwards? That's really the question. Always when you have a downward trend. And again, the documentation that's provided, in this case, a W 2 income, borrowers usually going to be providing pay stubs, W 2s, tax returns, maybe if necessary. The documentation must support a history. Notice I have that in red, bold, italics. The history of receipt. And obviously, then be able to document the amount, frequency, and duration of the income. When you're looking to document a history of the receipt, um, one of the most important component there for this type of for W two income is a minimum history of 2 years is recommended. That's the key here to properly document the history of receipt of W two income. Is you got to verify minimum 2 year history. Now, that doesn't mean that less than 2 years is not accepted. We have exceptions like the person that just graduated from university, the person that just got a certification in a new career, right? Nursing tech, radiology tech, some kind of tech, and they just started on a new career, but it's a career type job that you obtain after maybe doing a 12 or 18-month certification course. That's something that then they would accept you having less than 2 years for sure. Anything less than those kind of typical examples is really going to be hard for somebody less than a 2 year history of receipt or history of receiving W 2 income, unless, again, student just got or just started a new career less than 2 years ago due to some certification. Those are good workarounds. Other than that, you may need to get work hard to document a lot of positive compensating factor. So again, now this is very similar to when you're dealing with variable income that does not have an expiration date or is not a depleting asset. Remember, on those we stated that we did not need to provide so much continuity as much as the history of receipt of the item, including current receipt of the item. So couldn't just provide last year's W twos. You'd have to provide some current pay stubs as well, right? So continuity. You heard me mentioning continuity of income when I was talking about history of receipt. Well, definitely continuity of income is going to be an issue because if your W two income consists of not just base pay, which has to be documented by a history of receipt, but also some variable income component like overtime and or bonuses, then that is a variable income type, that is going to require continuity of income verification. In some cases, you're going to need to prove 3 years continuance of that item. If it's overtime or bonuses, just that it's going to continue, that you do need some verification that it will continue. Another challenge we're going to get is just basically the borrower can't provide the needed pay stubs. Either they lost them, they can't, the employer doesn't have them, or the pay stubs may not be formatted properly, which the with the necessary information. There's some some personal pay stubs, handwritten pay stubs, whatever they may be. They don't have a start date, a pay period date. They don't have itemizations of deductions or anything. They don't have a lot of the stuff that you need that a pay stub is supposed to have for you to be able to use a pay stub other than other documentation, which we're going to talk about shortly in our solutions. So again, the pay stubs either can't be provided, or the ones provided do not have the adequate formatting, or they could be complicated pay stubs like nurses, right? Don't you all love those nurses pay stubs that have like 10 entries for different income streams that they have from their job? They got their regular pay, then they got the shift differential 1, shift differential 2, shift differential holiday, double shift overtime, earnings, this, and what do you call it, education, and this. I mean, a lot of stuff that goes on. And then on top of that, you got the time off. Is it paid time off? Is it paid time off that they just got paid for and they didn't take the time off, or is it actual paid time off? Right? I mean, a lot of things going on in some of these pay stubs that you need additional documentation. Or you could have other issues like with the W-2s as well. What type of issues could you have with the W-2s? Well, either they're not provided, or the one that's provided is lacking information. And what are we talking about there? Well, like if you remember when we were talking about the tip income, so you could have a server in a bar or a restaurant, which is a W-2 employee that has a base pay plus some type of commission, which is your tips. The tips in some cases are reported on the W-2 in a different box under tips, and sometimes they're not. So then you need additional information, either a verification of employment from the employer if they can break down the tips there, or the tax return. But then I'm talking about the solutions, right? So, what are some of the solutions for documenting the receipt of W-2 income, right? We're talking about history of receipt, and then we're talking about continuity of receiving the variable income, which is the next page. So, what are some of the ways that, we were talking about pay stubs, right? Well, I mean, some of the things are more obvious, but still got to break down the obvious. We would need updated pay stubs from the last 30 days, because pay stubs always have to be dated within the last 30 days. So a lot of times I see files get turned in. Oh, well, those are the pay stubs that I had, and they're from like 2 months, 3 months ago when you originally pre-approved the borrower. You need the updated pay stubs, because you need to recalculate the year-to-date income, right? Because on all of our W-2 borrowers, if they're on either salary, or especially if they're hourly, you got to go with that year-to-date income to make sure if they're hourly that they work the same number of hours, or if they're salary that they didn't get docked some weeks because they just decided to take paid time off for a month, go on a sabbatical or something like that. You're assuming they make a salary of $120,000 a year. They took 2 months off on unpaid leave. You wouldn't know that unless you actually looked at the year-to-date figure on the pay stubs. So again, updated pay stubs from the last 30 days, get that year-to-date figure. That's how you have to properly calculate the income, right? You're not going to be looking at 40 hours times $15 an hour is their income times 52 divided by 12. No, you're going to go with the year to date figure. And that's one of the biggest challenges we have when you're calculating this is that. So there is actually a W2 income calculator that we all have at our disposal in our income calculators. So in there you can put last year's W2, the prior year's W2, the current year to date, what their hourly earnings is and how many hours per week they're supposed to work, and the system will calculate a figure for you based taking into consideration the year to date figures. So real important year to date figures on our W2 pay stub borrowers. If you are using pay stubs and the last 2 years W2s to verify the income, please note you will still be required to provide a verbal verification of employment to confirm that the borrower is still employed. That's critical because we're confirming historical receipt, but we got to confirm that they're still employed, right? So that's what the VVOE, verbal verification of employment, is used for. Um, we mentioned W2s from the last 2 years, which will go hand in hand with the pay stubs. Now, uh, the one that I really like, especially, I mean, if we're talking about an employee anyhow, is the written verification of employment form. This is the unicorn for these full doc salaried or hourly employees, especially those that have more complicated scenarios with automobile allowances, uh, commissions, overtime, variable rate of pay on different shifts, and maybe got a earnings raise in the middle of the year. Further complicate the whole breakdown of how do you actually calculate this borrower's earnings. So I love if I sniff out any kind of complication, I'm not gonna wait for underwriting to hit me with the condition, and then I may be faced with a situation that may take me. I mean, if it's on the work number, that's easy, but if it's not the work number, then I'm gonna have to probably order that verification of employment to be completed by HR personnel or whoever they use. And there may be a 5, 6, 7, 8 day turnaround time. It may not be as quick as we all like it, as we all know. So if I sniff out any kind of a complicated income, I'm going to request that written verification of employment proactively, right? In the beginning of the process and have it because you know what? That's going to be probably going to simplify all of these complicated incomes, for nurses, these complicated pay stubs that you get because it's going to clearly confirm this is what the important components of the written verification of employment form is going to clearly confirm the start date of that individual, the rate of pay, the year to date earnings. That's uh, really important, especially if it's unclear in a pay stub when the actual fiscal year started. If it did it start January 1st or before January 1st? So how many pay periods have there actually been? I mean, that's all stuff that you have to know. Well, in the written VOE, that's clear. So year to date earnings. If the borrower is still employed, and depending when you get this written VOE, it may also satisfy your verbal VOE. And any earnings increases or raises throughout the year, we'll be able to document it because the written verification of employment has a remarks section where they can add additional details regarding the income, like you know, Jane Smith received an increase in hourly from $18 an hour to $28 an hour on the July 4th pay period, right? Pay distribution. So now we know that that would be the reason why we would have that discrepancy in year to date if they're telling us they make all this money, but the year to date don't necessarily add up. So now we got to look at just the year to date before and after on that date, and it should add up to what they're getting in their earnings. So again, the written verification of employment form really simplifies. I mean, I've gone on a couple of file reviews the last couple of days where had they obtained the written verification of employment a little earlier in the process, they wouldn't be getting all of these bizarre underwriting conditions or having a loan get put into suspense because the underwriter is questioning if an income is if a certain component of the income is variable income, and the underwriter is also questioning the fiscal year. When did they, how many pay periods that we actually had? Because and on top of that, because the pay stubs provided were a little old. So again, a lot of the things that we're talking about now, that you could see how they could complicate your loans and lead to unnecessary conditions. So these are solutions for documenting the receipt of W-2 income, and then are solutions for continuity of income. Now, if you recall our variable income class that we just had, calculating variable income was really an expansion of a small part of this lesson, right? Because variable income is a component of W-2 income. W-2 income just means you get the income via a W-2. It doesn't mean that that you don't have bonus, that you don't have overtime, that you don't have commission or any of that variable income component, right? So again, the solution for continuity of income, in this case our variable income, is most easily completed via a completed written verification of employment form, also known as the WVOE. That is the best solution, again, not just for confirming receipt of the income, but confirming continuity of that income. In this case, is going to confirm the overtime that's going to continue, plus the overtime that was paid in the prior years, so that we have a correct average. And remember, when you do receive these VOEs, you have to look at that trend. Remember, we were talking about the income trend. If the trend is down, that means the current year of that variable income amount is lower in, let's say, 2023 than it is in 2022, or it's lower in the year to date. This isn't one case where they like using year to date, right, when it's in their favor, but it's lower in the year to date than it is in the 2023. You're going to go with the lowest figure. So in this case, if the year to date figure is low when you divide, that's the one you use. If the 2023 figure is lower than 2022, you don't average out those. You're going to use just 2023. If 2022 is lower, then you do get 2023 plus 2023, add them up, get the average, and that's your number. You can't use the higher number either, just the higher number. So again, you wouldn't know any of that properly, and that is the same, pertains the same to bonuses, commissions, automobile allowance, right? That's a one that in some cases is quite a bit of money, especially if they're paying for it, paying for like as a debt, but then gets reimbursed by their employer for their car payment and gas and this and that. It could make a big difference in qualifying for a loan or not. And other variable income types. And then we mentioned the complicated pay stubs, especially like for nurses. The written verification of employment form can group all of those income types that fall under base income, go under base income. So maybe 7 of those categories on the nurse's income falls under their base income. Boom. So now you just simplified the pay stub. Now you're just dealing with the shift differential, which may fall under the base income. And then the overtime is going to be overtime. And any bonuses are going to be bonuses. And anything else under that would be other income, like education, stuff that wouldn't fall under base. But most of the time I find that those end up falling under the base income. So now you got the written verification of employment form with the base income that you need and the overtime or commissions or everything else that you need, and now you have a proper application that you can document. So again, the written VOE critical for all of these situations to confirm overtime, bonuses, commission, maybe allowance, other variable income type, and our complicated pay stubs. Now you can, right? If you, let's say, get if they do the VOE, they don't do a written VOE in the employer, right? They say no, just go to the work number or whoever they use. That's all they use. So you use the work number, but the work number doesn't give any explanations of anything, right? It's just data. So at that point, you're going to have to reach out to the employer or HR, personnel, managers, whoever can provide you a letter breaking down whatever you need broken down. If it's regarding nurses, those or other people with those really odd pay stubs with a bunch of different categories, then that's what you look at there. Uh, Now, one thing that I didn't mention previously that you may need a letter of explanation from the employer for, which I forgot to mention here, is odd entries in the pay stubs. Like loan repayments, 401k loan repayments, or just other loan repayments that are being auto debited to the pay but aren't disclosed on their credit report, alimony withdrawal, child support withdrawal, or stuff like that that's going to show up on a pay stub that you're going to need additional explanation for. And I guess I would put that into the pay stub, complicated pay stubs scenario. Well, you're going to need additional documentation there. In this case, that goes to our non-employment income training. How do you document alimony, child support, or anything like that? It's the same documents. To document what that is that you're paying, and how long it is that you're paying it for. You're gonna have to provide the actual document, right? The divorce decree, the separation or settlement, property settlement agreement, or whatever it is that states the repayment, or if it's an undisclosed liability, then you're going to have to provide, the bar is going to have to provide whatever statement they have on that. You get it added as a trade line update to their credit in a supplement. Different. That's another component on the W-2 wage earners that you got to take into consideration when you're looking at the pay stubs, right? Just any pay stub entries that don't make sense, you're going to need additional documentation or explanation of what that may be. And some cases it's from the employers. Other cases, like I mentioned, is going to be some legal document or whatever is available or necessary to explain the entries. So a lot of considerations here for our W-2 earners. It's not all so cut and dry like we all think, right? 30 days of pay stubs, last 2 years W-2s, and that's it. Nope. Look at the whole situation. Look at the data. Look at the pay stubs. See if there's any odd entries on there that are going to need additional clarification, so you don't get caught off guard in your income calculations. Because it's not the first time that I've seen an underwriter come back with a counter offer on the income or on the DTI, and the MLO can't figure it out, and it was because buried deep in the pay stub was a $400 or $500 payment for something, and now their DTI is over. So, keep an eye out for those.
All right. Well, I don't see any questions, so I guess you did a good job. Nick, you have any questions or anything to add?
I think the moral of the story is get the VOE is all I heard Jose preaching there. So
yes, sir.
You like the written VOE? Are you suggesting to use? When do you use the automated VOEs?
Well,
as a preference to the written VOEs, I guess.
I first like to ask what is the because some employers have a set method which is the only method that they'll do it. So the automated ones, depend what system. Some have a cost associated with it. and needs some type of collaboration from the borrower to click, certain authorizations. But the automated ones are certainly not going to give you any additional details that you may need, like if you need them to add remarks about the continuance of a variable income. The automated one can't do that. That's only going to be possible from one that's prepared by a person, signed off on by a person. So even if they're saying the only way to do it is one way, you could always make sure that it would not be possible for them to actually fill one out, because if not, then they're still going to have to provide a letter of explanation, usually from the employer, if it's anything like that, like continuance of overtime or bonuses.
All right.
Let me ask you one more question that I will probably you didn't cover in here, I guess. What if they don't file a tax return and they could have W-2 income that's untaxed?
Okay, so if they didn't, so now we're talking about like if they
We're
had
talking about our
pension
retirement one last
income,
week, but
pension
it could
income.
be W-2 income, right?
Yeah.
Some people, like, if you employ your child, maybe you only pay them $5,000 a year. There's no taxable event for anything under $5,000, even though they may have withholdings on the stub. It's non-taxable. How do we figure that out?
Well, if it's non-taxable, the first way to try to resolve that issue would be to provide a tax return. But now it's like the dog chasing its tail here, because how do you provide a tax return if a tax return wasn't required, right?
Yep.
So at that point, they do provide one of the workarounds that I've heard suggested by some underwriters at some of our investors is to request a W 2 transcript, and it should come out blank, right? Like a W 2 wage and income transcript, I think is what they call that one, which is going to show W 2 and 1099 income. And it should show no record for the borrower because none was provided, or maybe one was provided, but or if it's the record of account transcript, should be the one for income. But if there's no tax return filed, because no tax return was required to be filed, the system will show that, and then you can provide that document that there's no record found, and they may accept that, because then there's other things to come into play, like if you grossed up the income, how do you prove that it's actually non-taxable? Again, if no tax return was filed and it was the same, that was the workaround was suggested for a scenario where we had I think it was a VA borrower that had non-taxable income that was getting grossed up.
So if you can't prove it, you can't gross it up, basically, is the moral of the story. So same thing that we had with the pension type stuff. It's not as common with W-2, but you may have a spouse that only has a small W-2 and their portion is not taxable if they file a separate return, perhaps, or maybe they're not quite married yet, whatever it may be. We do have a real question, though, here from Luca, Jose. Same idea here. Good train of thought. If W-2 only, do we need taxes? This is a good question.
Well, again, it depends what loan program we're talking about here, right? Now, because for example, FHA, and any other program that uses automated underwriting, an agency loan, FHA, conventional VA, USDA is all going to come back with findings. And in the findings, it's going to state if it wants 1 year W-2 or 2 year W-2s, 30 days worth of pay stubs, and if it wants tax returns at all, right? That's the key. So usually for an employee, a non-self-employed individual, tax returns will not be required. It's going to ask either 1 year W-2 or 2 years W-2. What that means for anybody setting up a file, the 1 year finding versus the 2 year findings is the 1 year finding is your most current year. And if you had a really amazing current year, and you get the 1 year findings, you should be basing your income on that initial 1 year finding. And if you don't get the 1 year finding and it says 2 year, then you got to redo your income and average it out. However, it has to be for your income stream and the trend. But taxes aren't going to be required on a W-2 file usually, unless there's either self-employment also involved, or unless there's real estate involved, or capital gains, or any other income type that is going to require producing a tax return with the schedules included in the tax return to be able to calculate that income type. So the real estate needs the Schedule E. So for the Schedule E, you need the tax returns. The dividend income, I can't remember which schedule, if it's B or D for the dividend income, but it's one of those where then you're going to need the tax return to provide that schedule and show what you did in the last 2 years to show the history of receipt. Now this all goes back to we discovered the last 2 days. History of receipt, and then for that type of income, you're probably going to also need a letter from the accountant, tax preparer, CPA, whatever they have, to verify the continuity of the income. Tax preparer is going to say, "Yep, Jane Doe is a flipper. She's been flipping for the last 3 years, and she's going to be flipping for the foreseeable future because she has a lot of real estate that she's going to flip. She's Jane the flipper, right? Whatever." So that's different components as to why. So now, if you're doing non-QM, right, and then you got to look at the guidelines to see. But non-QM loans, I don't think if it's depends on what they require. If it says 1 year income, but you got to give W-2s, pay stubs, and the 1 year tax returns, then that's what you have to provide for that 1 year income non-QM program. It's all guidelines based at that moment.
So let me rephrase Luca's question then for him, because I think I want to get down to this. Jose's, you're going on tangents a little bit there. I think what he wants to get down to is if we do get findings for W-2 only that don't say taxes, can we go no taxes?
If the findings say, if it's AUS and the findings say W-2 only, then you don't have any need for taxes. And I'm going to tell you, it's a great question, because I just had a loan I'm about to close where my findings were W-2 only, 1 year, and 30 days pay stubs. So then underwriter sends the conditions asking for a 4506 for tax returns and W-2s, and they were going to execute this 4506. So, and the borrower was like, "Hey, the co-borrower's tax returns aren't ready. They're not going to be ready, and if it's going to be a requirement to close, and if they look at the last years, it could get crazy, and then this loan will never close." So I pushed back to underwriter. I said, "Wait a minute, this loan I got W-2 only findings. Why are you wanting a 4506 for tax returns also? The 4506 should be for W-2 wage and income transcripts only, and only for 1 year, because that's my findings." And they replied, "Oh yeah, guideline changed, and yeah, we only need that." Yeah, right.
They just made a mistake, huh?
Yeah. You know what I'm saying? So I saved the loan because I saw what the conditions were on the AUS and just pushed back.
And all right, let me get back to the question here though. So if it says W-2 only, they can do it.
Yeah.
If it says W-2 only, but they own any other real estate, can they do W-2 only?
It's gonna be an issue because when they see the application, they're gonna need to confirm no serious losses on those properties. That's the problem. I mean, they're gonna be able to see your payment history, but it's going to be really hard to be able to document that you're not losing money on those properties and don't have any undisclosed liabilities unless a Schedule E is provided.
And let me tell you a secret: if you pop in a rental property in your REO section, you will never get W-2 only findings, right? So it's a it's a chicken and the egg, right? You're thinking you're good. It's probably because you missed a box or mischecked a box, because there is no such thing as W-2 only if you own a rental property. You either have to prove that you're positive income or not negative income, even if you're not using the income. That's where a lot of people get confused, right? Just because you didn't use the income from the rental property, can we just not say anything about it? No, right? So I think that's where a lot of people get lost. So it's the same question. I could answer you 100 questions. If you have a self-employed business, can you do W-2 only?
Absolutely not.
Exactly. So even if they don't disclose it, guess what? It's going to come up, guess what, on Fraud Guard that they own a LLC, whatever it is, it's going to come up. So even trying to hide things is not going to work either, just because you got W-2 findings. So make sure you fill out the application. Of course, customers can hide things. It'll come up later. You'll have to redo the application, rerun your findings. And just as I said before, it won't return W-2 only once you disclose. Even if you don't use the income, if you disclose a current self-employed position, it won't run W-2 only. So you just got to be careful with what you put in. If you get W-2 only and there's something that you think, wow, I got away with one, you probably didn't, right, Jose? It's going to catch you one way or another.
Oh yeah, that fraud guard picks up those undisclosed properties all the time. Undisclosed business.
Yeah, even if they've sold them, a lot of time you have to prove that they've sold them, that they've divorced them, all those types of things.
Undisclosed wives, undisclosed kids. I mean, I'm telling you, technology is everywhere.
Undisclosed kids. Huh?
Yeah,
Wow. That's wild.
Yes.
Okay.
The pay stub didn't have it. It wasn't anywhere to be found in the tax returns, but there it was in Fraud Guard. They may have picked up that you got divorced or something. Some filing on your record somewhere throws some red flag up there that requires us to provide the marital settlement agreement and the divorce decree.
All right. Great presentation.
Keep in mind, too, those things can pop up from years ago, too. Just because someone was divorced 5 years ago, 7 years ago, you still have to provide those documents. Bankruptcy 7 years ago, just because they can get findings now, you still have to disclose that it was discharged fully and stuff a lot of times. If it pops up on Fraud Guard that it didn't fully disclose or discharge, where it can confirm that it was or was not. So a lot of things can pop up having to do with W-2 that Jose mentioned, that will pop up other places. Even if it doesn't pop up on the W-2, you might have alimony, child support, other things that pop up other places.
All right, cool. Well, we appreciate everybody tuning in. We'll go ahead and wrap it up then. Went a little extra tonight, but that was great. Remember, we do this every Tuesday and Wednesday at 7 p.m. Eastern time, where we go through a new training topic for loan officers. So we'll be back next week with some good new topics. So thank you, everybody, for tuning in. We'll see you next week, Tuesday, 7 p.m. Eastern, for the next episode of the Loan Officer Training Series with the Mortgage Calculator. Have a great night, everyone.
Thanks, everybody.
Have a great night.